Welcome you to this class once again on IFRS for SME. And here we have a practical question that we'll be using for conversion of an entity's financial statement prepared in their local GAAP to IFRS standard, either for IFRS for full conversion, for IFRS rather, or for IFRS for SME. So with this question, we have to exercise or implement all that we know about IFRS. And I will seek your indulgence that while listening to this lecture series, you should pay proper attention to it and follow it practically, because this is a practical section of all the IFRS we have been mentioning. So, St. Mike Limited, statement of earnings for the year ended 31st December 31st rather 2011. This statement is prepared in US GAAP, as we can see dollar signal there. Net sales, cost of goods sold, as you can see, these are the financials that have been prepared by an entity. So our job is to convert it to IFRS standard. Okay, so the financials will be given to you. These are a statement of earnings for the year ended 31st December. As you can see, the information, highlighted on them. Okay. So, the expenses side, you can see the expenses, operating expenses side, salary expense, utility, advertising, repairs and maintenance, depreciation expense, bad debt expense, amortization expense. All the expense sum up to be 201,600. By the time you minus that from the gross profit or gross margin, we're going to have 124,200. So other revenue and gains, as you can see, dividend revenue, gains on sales of investments, other expense and losses. You can see interest expense. You can see loss on inventory write down, loss on retirement of debt. You can see so income from continuing operation before taxes is been given, as you can see it here. So then income tax expense is deducted. You don't have income from continuing operation. So discontinued operations are as follows. You can see discontinued operations. We deduct this from it. We have our net income to be 51,493. Then we have the statement of comprehensive income. It is split. It is not combined together. So the statement of comprehensive income for the year ended 31st December or December 31st, 2011. Also in thousand, you can see the net income that was arrived from the profit or loss statement. 51,493 will come in as net income. Then other comprehensive income will be added to it, which is unrealized gain unavailable for what? Available for sales security, and that is it. So it is the net of tax. So net of tax is what we have there. So comprehensive income is the total comprehensive income is 6,983. So we now have the statement of changes in equity for the year ended. So these are the financials of the company will be given to us, and our duty is to convert it into IFRS standard. So this is a statement of changes in equity for the year ended December 31st, 2011. As you can see, it's prepared. Then you can see statements of financial position as of December 31st, 2011. So you can see the statement of financial position. You will also be given, and you can see the balancing value in total agreed. So information for conversion to IFRS basis. These are the information for conversion to IFRS basis. So this is where our work starts. Let's look at the information together, and as we're looking at the information, we'll also be analyzing the standards that govern the information, the standards that governs the information, the IFRS standard that governs the information we'll quickly be stating that. Okay, so what I'll be doing here is at the first page of our solution, I want to put the guidance. Let's put the guidance. The guidance for conversion. Let's put it that way. So we have information item. Then we have the IAS, or the IFRS that is guiding such standards. Okay, so let's see the items, the additional information or notes to the account. St. Mike Limited plans to use the fair value measurement model option for reporting its land under IFRS. The company has obtained independent real estate appraiser as follows. So additional information 1 or statement 1, we can be using the IAS 16 will be in force. IAS 16 is what we will use, and IAS 16 deals with what? Item of PPE, property, plant and equipment. So that is it. That is IAS guiding that that will be in force when we are trying to, by the time we want to correct that or convert the statement, the financials, into IFRS standard. 2. This discontinued operation presented in St. Mike Limited 2011 US GAAP financial statement relates to a disposal in 2011 of the company's stores in Florida. So St. Mike Limited continues to operate retail stores in other parts of the world, of the eastern US. The Florida operation that we are sold qualify as an assets group, but not as a separate major line of business or geographical area of operation. So the income from operation of the Florida store of $16,920 before tax from the beginning of the year to the sales date was determined as follows: the net sales, the cost of goods sold, salary expense, and what have you. So the cost of goods sold figure of $22,500 is computed on a LIFO basis, and you know the IFRS frown at LIFO. The available approach is what? The available method of inventory is what? Is FIFO and weighted average. So that means we have to alter that statement. We have to change it. So the figure would be the same under the average cost method. So item 2 will be governed by IFRS 5. IFRS 5, which is what? Non-current asset held for sales and discontinued. Non-current asset held for sales and discontinued operation. Non-current asset held for sales and discontinued operation. IFRS 5 will take care of that additional information by the time we will be converting it to IFRS. Okay, item 3. What's the problem with item 3? Let us quickly locate item 3. What do we have there? Item 3. Information related to its cost of inventory and cost of goods sold. You can see inventory LIFO is LIFO value, inventory weighted average cost value, cost of goods sold LIFO, and we have cost of goods sold average cost approach. So if so that is item 3 will be governed. Item 3 will be governed by IAS number 2. IAS number 2, which is dealing with inventories. It dealt with inventory. So IAS number 2 will be in place while correcting that when converting. Beg your pardon. So, number 4, if permitted by IFRS, St. Mike Limited would like to present its other comprehensive income in the same way it has been chosen for its US GAAP financial statement. So, number 4 is what? Is IAS number 1, which is presentation of financial statement. Number 4 is IAS number 1. We take care of that. IAS 1, we take care of it by the time we start the conversion. Let's see 5. The bank overdraft of 8,500 exists on a checking account at what? Citigroup. Okay, so this particular account sometimes is overdrawn, and when that happens, the overdraft automatically converts to a loan balance. So St. Mike Limited does not have any other cash account at Citigroup. Okay, so that will be taken care of. That's number 4 will be taken care of also. Sorry, number 5 rather. Number 5 will be taken care of by IAS number 7, which is statement of cash flow. IAS number 7 will take care of item number 5. By the time we get there, we'll consult IAS number 7. IAS number 7, which is statement of cash flow. Okay. So this is what you do when the client gives you its financials. Look at the additional information to it and try to apply to determine the IFRS or the IAS that is in what that we correct such an error. So this is a practical approach you must take while trying to convert the financials of a company to IFRS, be it full IFRS or the IFRS for SME. So at the year ended 2010, St. Mike Limited has notes receivable totaling 61,300. St. Mike Limited recognized impairment of these receivables in 2010 amounting to 15,700. So the company has determined that the same write-down would have been needed in IFRS financial statement for 2010. At the year ended 2011, St. Mike Limited continues to hold these notes, and the debtor's credit rating has improved dramatically. As a result, the present value of the expected future cash flows from the notes has increased to their full face value of 77,000. So that is item number 6. Item number 6 will be governed by financial instrument recognition and measurement. That is IAS number 39. We'll be dealing with that. So to deal with that, IAS number 39 will deal with that. IAS number 39 will be consulted while dealing with that note or item 6. Item 7, during 2011, St. Mike Limited operation in Virginia, we are hit by the biggest earthquake to occur in that area. To occur in that area in more than a century. So the company suffered losses to facilities and inventory totaling 29,900 before tax. So the IAS number 1 will also deal with that, which is a presentation of financial statement. It will be presentation of financial statement. Number 7, IAS number 1 will take place there. That is dealing with presentation of financial statements. So item 8. St. Mike Limited has gathered the following information related to the market value of its inventory at December 31st, 2011. Replacement cost, net realizable value reduced by normal profit of 174.30. And number 8 is still what? Inventory. It will be dealing with that. Number 8 is inventory. 8 is what? Inventory, which is what? IS number 2. IS number 2 will be dealing with that. Okay. Number 9. St. Mike Limited deferred income taxes under US GAAP at the year ended 21 at the year ended 2011 we are as follows, please. We are as follows: current deferred income tax asset, current deferred income tax liability, and non-current deferred income tax assets, then non-current deferred income tax liability. All of the above deferred income tax amounts were levied by the same taxing authority. St. Mike Limited must determine how the deferred income tax should be presented under the IFRS, and that is still dealing with what? Presentation of financial statement. So IS number 1 is still applicable. Assuming the company income tax rate for all the years and the income tax item is 35% for any adjustment that creates a change in St. Mike Limited income taxes. Recognize the effect of the change in income tax through the company's deferred income taxes account. That is just a note, so no IAS or IFRS that is responding to that. Okay. So information 1, as I said, relating to land, and 3 relating to inventory cost required work. You must take note of that. Information 1 and information 3, we are going to treat them retrospectively. So retrospectively, that what? We are going to effect it before. Okay, take it back. Therefore, information item 6 relating to note receivable, IS 39, paragraph 65 will deal with that, as I said earlier on. Information item 9 relating to presentation of deferred income tax, IS number 12, paragraph 74 will deal with that. So for information item number 10 relating to calculation of deferred income tax, the correct figure for the next deferred income tax at December 31st, 2011 is what? Is 7805 credit, as you can see in the question. By the time we get there, we'll quickly, I will show you that value. Okay, so that is how we are going to work it out. So that will be our guidance.